Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar. A third bullish white soldier yesterday and a suitable continuation from last week's compound weekly key reversal up. The top was capped by the combination of the April 2020 low at 107.25 and the flatlining short medium moving average currently 107.21. The key support for the move back up, I say back up, because we are still within last week's range. The key support, well, if only just pushing over it, the key support for the move back up continues to be the rising medium moving average, currently at 105.92, which has effectively propped up the market over March. Looking below, and for the moment setting aside the trend lines from the September to November 2022 ascending wedge pattern, we have the support of the 2020 low at 106.35, the rising medium moving average, of course, and the April 2017 low at 105.68. Meanwhile, on the top side, we have the May 2020 low at 107.66, which looks an interesting resistance, and then limited congestion from January this year until the 50% Fibonacci line of the January 2021 to September 22 move at 109.44. Now, so far today, a small move over both the short medium moving average and April 2020 low, but it's been a cautious move higher, though not right now. It seems to be starting to gain some traction. Now, I suspect the move was cautious because of this May 2020 low that is not that far above, but we are testing that right now. Cable, aka sterling against the US dollar. A third bullish white soldier yesterday and a suitable continuation higher from last week's outside week and the prior week's weekly key reversal up. Prices pushed up and closed over the June 2020 low at 122.48, which was the next overhead resistance. We now have the 50% Fibonacci line of the June 2021 to September 22 move at 123.16 as the next resistance. We're now getting awfully close to target X at 123.75, the primary target for the February to early March descending wedge pattern. The secondary harder to reach target X1 is higher up at 125.90, and you would have to see a move up to the highs of June last year to achieve that. Now, so far today, well, it was an aversion to test up to the 50% Fibonacci line at 123.16, with prices dipping back below the June 2020 low, but not really by much. They're just sitting above it at the moment. Euro sterling. A fourth bearish black crow yesterday and a continued follow-on low to last Wednesday's daily key reversal down, though with last Thursday and Friday also being indecisive spinning tops, I have some misgivings on how strong a move lower it has really been. Nevertheless, it was a third close below the slowly rising medium moving average, currently 87.74, which should say something at least. Perhaps the most interesting feature was how the market reached down and halted, once again, at the combination of the April 2021 high at 87.19 and the seemingly more powerful August 2022 to date uptrend, currently at 87.25. This uptrend has been a good support in December and as recent as last Wednesday's key reversal down. Below this, we also have another heavyweight support in the form of the slowly rising long moving average. That's currently 86.85. Meanwhile above, we have limited congestion up until the flatlining short medium moving average, currently at 88.31, and the interesting 50% Fibonacci on the March 2020 to March 2022 move at 88.51. Now, so far today, a reactionary move back up as the uptrend seems to have worked its support on the market, but only as far, well, it was only when I started this as far as the next resistance, the slowly rising medium moving average, which has been pierced, but only just, and it seems to be being pierced a little bit harder this time. It has actually set up the conditions for a bullish engulfing pattern for today, if only just. US dollar against the Indian rupee. A slightly lower, indecisive spinning top yesterday, which doesn't tell us much at all. It really doesn't tell me much at all. It is the big picture pattern that we need to look at here to gauge any idea of what may be going on, and that is still how the market is in between the overhead upper time, currently 87.29, and the middle time below, currently 81.43, which are highlighted in dark green on my daily chart of the October 22 to early January this year bearish shift pitchfork. A little below current levels, we have the August 22 today uptrend, currently at 81.79, which is highlighted in bright red on my daily chart. Now, this is a 5-pointer and deserves to be treated with respect. Then there's the question of the ascending triangle in formation during this year, between the flat highs of January and February at the 83 even area, and maybe the previously mentioned uptrend acting as a proto-lower trend line. I earlier decided to help visualize this a little better and have drawn and highlighted in dark blue an uptrend currently at 81.87 and a downtrend currently at 82.98 for this sideways triangle. I continue to ponder upon this pattern. Now, so far today, a somewhat reactionary move back up, but we're still within just yesterday's range and under that upper time resistance. US dollar against the Brazilian real. An immediate countering bearish harami yesterday to offset the previous session's combined bullish harami and bullish opening white Maribosa. The base of the action was once again the long and medium moving averages, currently 522.34 and 518.07 respectively. They're also the 50% Fibonacci line of the March 21 to May 22 move at 522.76. And I haven't even mentioned till now the support of the nearby broken upper time, currently at 520.95, the late July to late September 2022 bearish shift picture, which is highlighted in dark blue on my daily chart. This pitchfork is still influential despite being broken, though I'm minded to look more towards a new pattern that was created by this pitchfork, and that's the November 22 to date bear channel, currently 490 even to 539.85, which is highlighted in bright red on my daily chart. This bear channel is complementary to each other to the bearish shift pitchfork, with the shift pitchfork giving birth to the other. But I'm minded to think the bear channel is becoming the more dominant pattern right now. But then over all of this is the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A fifth countering bearish harami and possible shooting star pattern yesterday. Yet another intraday indecisive pattern. All this following on from last week's overall intraday indecision. I've done some spring cleaning on this daily chart, removing some of the pitchforks, which, while still influential, still managed to clutter up the chart and also the big picture. Thus, what we have left is a breached, arguably broken, bear channel, currently at 17.9965 to 19.1365, that has repaired itself and is highlighted in dark blue on my daily chart. It is not a perfect pattern, but it does have merit. I've also still left two other, what I believe to be significant features. The neckline, currently at 17.94.5 and highlighted in purple on my daily chart, or the February to April 2021 head and shoulders top. This has acted as the latest roadblock in this market's journey south. Then we have the neckline in bright green, currently at 18.59.45 of the January to May 2021 head and shoulders top. This neckline had been important back in February when it was getting tested, but has since diminished after the subsequent move lower, but it is still there. The only other features to note sit in between the green neckline and the dark blue upper bear channel line. They are below the market, the declining short medium moving average, currently at 18.64.70, and above the market, but also declining, the medium moving average, currently 19.03 even. So far today, a follow-on lower to yesterday's, for a change, actually having a second daily's pattern, a follow-on lower to yesterday's bearish harami and possible shooting star pattern. We are now approaching the short medium moving average and the green neckline.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.